CBSE pattern, ICSE pattern and state syllabus. So today's topic on ratio, liquid ratio. Last class we have discussed ratio analysis. So two ratios over gross profit ratios, new net profit ratios and current ratios. Gross profit ratio is the relation between gross profit and net revenue from operation. Net profit ratio is the relation between net profit and net revenue from operation. Current ratio is the relationship between current assets and current liabilities of the firm. Now we are going to ratio. Liquid ratio. Liquid means liquidity means easily convertible into cash. See, in a business, whatever may be the emergency requirement for the cash by way of selling some assets. So liquidity means easily convertible into cash. So this is also an important ratio. Liquid assets, how to find out the liquid ratio? Liquid assets is the relationship between liquid ratio is the relationship between liquid assets and liquid liabilities. What are the liquid assets? Are current assets minus prepaid expense. From the current asset total, we have to subtract stock and prepaid expense. We will get it. From the current liabilities total, we have to subtract bank overdraft. So we will get a liquid liabilities. So liquid ratio means it is a relationship which shows between liquid assets and liquid liabilities. Dear students, please do like my channel. Please do subscribe and share it. Okay, now we can solve one question, very easy question. Calculate liquid ratio. How to calculate liquid ratio? So here we are given information: current assets 85,000, stock 4,000, prepaid expense 1,000, current liability 43,000, bank overdraft 3,000. Now you see how to calculate liquid ratio in an easy way. Liquid ratio is equal to liquid assets divided by liquid liabilities. What are the liquid assets here? Liquid assets means current asset minus stock and prepaid expense. So when we subtract current assets and stock, when we subtract stock and prepaid expense from current assets, we will get 85,000 minus 4,000 minus 1,000. So we will get 85,000 minus 5,000. It will be 80,000. 80,000. Similarly, we have to find out liquid liabilities. Liquid liabilities. Liquid liabilities, we will get liquid liabilities. Current liability minus bank overdraft. See, 43,000 minus 3,000. 43,000 minus 3,000 is equal to 40,000. Now we got the value of liquid assets. How much is the value of liquid assets, dear students? 80,000. How it is getting 80,000? We are given current asset, stock, prepaid expense. So we have to subtract current stock and prepaid expense from the current asset total. It will get 80,000. Then liquid liability, current liability minus bank overdraft. Here in the question, no, prepaid expense stock, it is given separately. Then here also bank overdraft is given separately. So we should subtract. Otherwise, if it is given together along with the current assets, so we have, first of all, we have to add up stock and prepaid expense along with the current assets. Then we have to take the liquid assets total after subtracting stock and prepaid expenses. Then liquid liability. If current liabilities, all current liabilities are given together, what to do? We have to add up all current liabilities. Afterwards, we have to subtract bank overdraft. So here it is given separate. Current asset, current liability, asset is given separate. So that is why we are separating it. Okay, see 40,000 liquid liability. Now we can find out the liquid ratio. Liquid ratio is equal to 80,000 divided by 40,000. So cutting zeros from both sides. 80,000 divided by 40,000. Then four zeros are cutting from both sides. 8 by 4 is equal to 2. 2 means 2 times. Okay, so this is the calculation of liquid ratio. Next we can understand something about stock turnover ratio. Stock turnover ratio is the relationship between cost of revenue from operation or cost of goods sold divided by average stock. How to find out cost of revenue from operation or cost of goods sold? Net sales minus sales return. Cost of goods sold or cost of revenue from operation is equal to total sales minus sales return or return inwards. Like that, we will get a cost of goods sold or cost of revenue from operation. Next, average stock. How to find average stock? It is very easy. Average stock is equal to opening inventory or opening stock plus closing inventory or closing stock whole divided by 2. In short, opening stock plus stock and inventory same meaning. So you should deal with these two terms of stock and inventory, same meaning. So opening stock plus closing stock divided by whole divided by 2 is called average stock. That is the way of finding this one, stock turnover ratio. Okay, students. Then now we can sum up that what we have studied till now in ratio analysis. Ratio analysis is the relationship which shows that numerator value and denominator value in terms of percentage, or it is simply expresses the relation between two mathematical figures in terms of percentage. There are different types of ratios, important ratios to be asked for the examination. Gross profit ratio is there, net profit ratio is there, current ratio is there, liquid ratio is there, then stock turnover ratio is there. Next, we have to understand something about working capital. What do you mean by working capital? In accounting language, working capital means it is the difference between current assets and current liabilities. Taking the difference between current assets and current liabilities, we will get a working capital. Current assets, list out some current assets: cash in hand, bank balance, stock or closing stock or inventory, prepaid expense, then accrued incomes, cash, bank, prepaid expense, accrued incomes, sundry debtors, bills receivable. These are the important current assets items which is coming in the asset side of the balance sheet. Next, current liabilities. List out some current liabilities. See, sundry creditors, bills payable, loan means short-term loan, bank overdraft. These are the current liabilities. Then liquid liabilities. Liquid liabilities is equal to current liability minus bank overdraft. current, liquid asset is equal to current asset minus stock and prepaid expense that we studied just now. Gross profit ratio, gross profit divided by net revenue from operation, because the gross profit of a business related to sales. Net revenue means sales. So when sales increases, definitely profit will increase. When sales decreases, definitely profit will decrease. That is the theory. So if a firm having high sales, it means high profit. Similarly, as in case of net profit ratio also. Say working capital is the difference between current asset and current liabilities. Then what are the fixed assets? Fixed assets are the assets which are fixed in nature. Fixed permanent assets. For example, land and building, furniture and fittings, plant and machinery, all types of motor vehicles. My today's class is coming to end. I think you would have understood. I try to see my channel every time. See, when exam is very near, I will give more tips for you to get more marks. Definitely, you will be getting good marks by looking into my channel or class. So take the advantage of it. Surely you will get a good mark. I will try to do help for you. Okay, students.